They mightn't have $200 billion worth of goods that they can slap back against the United States, but they have got two things they can work with. One are bonds, two are the currencies. If you want to exert sovereignty, sir, I put it to you that the yuan could be a weapon of sovereignty destruction. We're looking at the basket, we're looking at dollar yuan. Would they, should they use the yuan as an instrument of global sovereignty might?
And the answer is no on both accounts. And I think the PBOC is well aware that this probably does marginally more harm domestically, compared to the international scene, because then it starts to generate fears about capital outflows. And, that is far more destabilizing. It tightens liquidity onshore, and then you'll have to see the PBOC do more. So, at this point, they prefer to leave it to higher up. So the PBOC would leave it to the higher up negotiations with the US. But at the same time, I think everyone, perhaps even US companies included, just want to know what the White House wants.
So they want to know what the White House wants. So you don't think the Chinese are going to use their currency, not weaponise the currency? What about weaponising Treasury holdings? I guess that's a no as well, then.
Well, that is a no as well. And actually, if you compare the two, probably the efficacy is, even less, because your own currency is something that you can sort of contain. But the Fed can absorb the Treasury, sales relatively easily, and considering the significant amount of experience they've accumulated, over the past few years or so, I think that's going to be even less effective, even if they tried it. And then you have, less reserve to actually, deal with pressing issues up ahead.
Jeff, look, I've seen a lot of petulant writing about, these markets are not that irked about trade wars, we're overreacting, and if volatility was anything to go by, it's not telling you that we're in some kind of suicide pact, to quote Lloyd Blankfein. How does UBS see the ratcheting? Where are we on the Likert scale of cataclysm? Are we, if 10 was suicide and 1 was things were grand, where are we on that scale in terms of trade wars?
Well, right now we're still positioned risk on, so certainly heading not exactly 1, but clearly heading in that direction at this point. Because ultimately, if you look at global trade relations and what actually impacts trade and growth, perhaps tariffs these days, the impact is a bit diminished compared to the regulatory side of things, and that's what US companies, European companies are talking about in China. China can't retaliate by higher numbers. US doesn't sell enough to China, so does market access tighten further? That could complicate things up ahead. But the broader picture here is data is strong, led by the US, emerging markets hopefully turning the corner up ahead, and that gives us reason to remain confident.